All right, guys, welcome back for another video. There's certainly a lot to talk about in Bitcoin today. We're seeing, a little bit of a parabolic run, parabolic at least on a lower time frame, up into a retrace of basically the dump since the FTX collapse right here. Now you can see I have an open position from right here. It's actually taken on a lower time frame down here from the 4 hour all the way up into this area right here. Generally the 618. So basically, we've got this retrace up into a 618 retracement right here. And now, this thing hasn't stopped yet, right? But it's just a point of reference because, you more often than not start to see, things start to slow down around that level. But, you know, it is important to mention that, we haven't seen that yet. It's just a broad indicator of, kind of where we would generally expect to see some type of slowdown. Doesn't necessarily mean that we'll see that at all. But you can see we clearly have an impulsive movement coming down from around this level. And you can see here I've got a pretty large position size on right now, pretty deep in profit. So I'm going to have to, take profit orders in the market, just enter some at market right now. Just do 333. And now you'll see kind of how I build this out. So we'll just do a market 333 right there. Now, I want to frame everything in the context of this swing, right? So we've got the FTX collapse up here. That was the high set in. I remember this very vividly. November 6th, I was actually at a Bears game that day, reading Twitter as all of the drama went down. And, of course, I had funds on FTX that I was able to withdraw, thankfully. But, you know, I actually didn't withdraw my funds until Tuesday. So this day right here, specifically when Sam Bankman-Fried posted a tweet about how, Binance had executed an LOI to acquire FTX, or to express the interest in acquiring FTX. Once I saw that, I jumped ship. I knew that was kind of a confirmation that FTX was actually insolvent, and some of the rumors were true. Anyway, that's not really important. It's just kind of some background context to why this swing is significant. But really, the swing's significant because this is a relevant swing high, this is a relevant swing low, and we can mark this off, right? You got your capitulation low here, not capitulation, but your volume expansion low right there. And then you get a stop run below there. Now, if you notice, this stop run is done on RSI bullish divergence. If you see this type of behavior, and now you also get a close below this close and a run below this low on a higher low on the RSI, where you have a lower low on the closing basis. Whenever you see this and then price put in the signature and then close back up into the consolidation body, that's that's buying pressure right there, right? That is buyers actively stepping into the market and buying. That's exactly what you want to see, right? This is the type of distinction you want to see, to know that the line you've drawn on your chart is support and not just a line you've drawn on your chart, right? Because until you see buyers step into the market, the line you've drawn on your chart is just a line you've drawn on your chart, right? You don't necessarily know where buyers are going to step in. And part of identifying support or resistance is, you know, acknowledging that you don't necessarily know where buyers or sellers are going to step in because you aren't them, right? And part of it is, just waiting and watching and seeing where they do step in. But anyway, they stepped in here, and of course, we have our high formed here, and then you start to form this low here. It's not really confirmed until price starts breaking out of this consolidation range here. You see it gets into a low volatility state and then breaks up, does a retrace into this level right here, and then comes back, settles back in. So we can go down to the 4 hour and kind of expand this a little bit. But you can see price retraced. Let's see if we well price goes down into this area right here. You can see this is the big volume gap area right here. So it, you know, price comes up, retest this level right here. So how we got a stop run below this level right here on bullish RSI, probably, yeah, you see the same type of thing on the RSI as you saw on the daily RSI, right? The stop run on divergence. You get a run up into this shelf right here, and then run down, and then run back up, another retest of this level right here, a retest of that same level, but also a stop run of this level right here. So whenever you get a stop run combined with a retest of a previous level into some area of inefficiency, uh, you know, of course, it's not going to be perfect, but generally that's a good thing to see. And now, if you look at this current swing, we're looking at this area right here. So if we go over here, you can see, let's see if we even this out. So you can see there's a little bit of consolidation over here, marked by, some wicks here before the entire thing capitulated. Now we actually have a little bit of more gap. I would put the level right here that I would be interested in right here, this 20,000 level. You can see here you had a run up above this level and then run back down. There's your bullish breaker. This is your level that's going to have carrying power. So it's not exactly the 618. Actually, this level I think would be more actionable up here, but it's just a framework to contextualize the swing, right? And you notice like a lot of people are, probably getting bullish right here. Um, I don't necessarily want to be getting bullish here. I am bullish overall, generally, of course, pretty consistently bullish, but it's not really. Well, it isn't the framework for contextualizing an entry in Bitcoin. It's just not, right. So I would be looking at that 20,000 level, and again, it's 20,080, but it doesn't have to be exact. Of course, it can be, you know, 20,000 exactly. Remember, whenever you're taking profit, you want to be a little bit more uh, liberal with your levels, right? And put it a little bit in front because you just want to get filled, right? But if you're framing an entry, that's a little bit different, right? You want to be a little bit more conservative, a little bit further back from the needle because ultimately you don't need to get filled on an entry, right? You can not get filled, and you just want to get the most favorable risk reward entry possible. So anyway, that would be the area I'm looking at. You can see right here, you kind of have the bodies of this consolidation right here. Right here, if you look at it right here, where things start breaking down, but you could look at this level right here. Really, this 20,850 level, I'll just do 20,800, and we'll put another order in 20,800. And then we've got our ultimate highs marked by the FTX highs. We'll just find those on this chart right here. So what do we've got? 21,478. Again, it doesn't have to be perfect. So go back to the daily chart. 21,478. We'll put it just below there. Let's see. 21,444. Sell. And again, and I'm just kind of running through the areas where I would be looking to take profit. Let's go on a monthly chart. I think there's also some confluence. There's a lot of different levels you could be looking at. I think just for the purposes of this, I'll be putting levels at any level I identify in the chart, because again, I don't really know how far this position is going to run, but I do want to be taking profit as profit targets get hit along the way. And again, I'm probably getting a little bit far ahead of myself at this point, but I think it is valuable just to do this for an exercise. So just put these in one by one. Let's see. And then I'll put one ultimately, see if we have a weekly close, an ultimate weekly close up here, 24,300 basically. So 24,300. Now, any further than this, and I'm really getting ahead of myself. Remember, I mean, of course, Bitcoin could rally further, but it's going to take some time. It's not going to happen instantly. And if it does happen, I have a chance to take profit along the way. Now, I want to drill down into kind of really, what's going on here and how do I manage profit in real time, right? So, within the context, so we looked at the greater swing, right? This swing from right here to here, which we have the 618, which is kind of the framework to start looking to start taking profits. We also have a swing on the smaller time frame, right? That led up into that prior swing. Now we can go down to the 1 hour, and that's really basically from this entry down here, where we put this entry in. Now this is a pretty large position. It's over a 1,000 Bitcoin position, but I'm going to use that low as the anchor for the swing, and it's really not appropriate to draw, retracement because we don't have a top formed yet. And the reason I would anchor it to this low right here is because this is where you get your impulsive movement starting to hit the market. So, really it's right there, but that's not really a swing low. So your nearest swing low is right here. The idea is that if you lose this area where price started moving impulsively, that's not a good sign. And if you lose this level in particular, that's it's another bad sign. Basically, what it's telling you is, right, some buyer stepped in the market big time at this level and pushed price up pretty obviously. If price starts closing below that level, that whatever players were entering the market at this point, they're no longer defending that price. So it's a very clear risk management level. If we go to the daily, it's this level right here, really this low right here. So it's not the lows where people would be looking at the lows like on the daily chart right here, but it's a little bit closer. If you see price come back down in the consolidation and close back below that period where volatility started expanded aggressively, that's going to be where I personally would want to start managing risk. But of course, everybody's different, and obviously it's contextualized within the entry I have. We can see here, if price were to come back down, we can just mark off the same levels that we marked off for the bearish retracement on a potential bullish retracement. So we're going to want to mark off this level right here, this level right here, this level right here, and this level right here. These are all going to be actionable. Now, I'm not really, if you could trade all of these levels individually. I'm not really going to be looking to add risk, just because I already have a lot of risk on this position. I don't need to add to it. But if things start breaking down, that would give me a little bit of context to start managing risk. Now, one of the ways I generally trade, an expansion like this that's starting to top out, is I'll mark off this level right here. And there's a nuanced approach that comes to trading these levels where I'll trade this as support on the first test. But, if it comes back, tests bounce off, and then retest down below that level, then the level that actually was used as support on first test, I'll actually use as an area for an invalidation to place stop loss and to start managing risk. Now let's see if we go down to a 5-minute chart, if there's anything that I can really see. Now I entered a stop loss at market, but I do want to play it a little bit tighter, and I'm just going to start trailing stop losses again, because the position I'm currently in is a little bit bigger than kind of what I'm comfortable being in. So I'm going to start scaling it down a little bit. Let's see if we can move this here. Go to a 15-minute chart. Let's see. we've got this level here, 19,381. Again, it's a very low time frame, so I'm going to be using very low risk. But I'm just kind of, choosing all of these lows just to kind of have a framework for sealing in some of the profits that I'm sort of already in this position, but I want to tighten things up a little bit. So let's go 19,222. I'll actually put 22 down there. So again, it looks a little bit random, but the idea is that if price starts collapsing down, it'll hit these stops in profit. And again, this is a very small amount of risk, right? This is 11 Bitcoin, 22 Bitcoin, relative to a 1,153 Bitcoin position. A very, very small amount relative to the entire amount. But again, where I would really start managing risk is if the swing really started to break down significantly, right? Like, again, but that would take time to play out. It wouldn't happen instantly. So it doesn't make sense for me to take profit entirely on everything in this position. I already took 33 Bitcoin off the position, and maybe I'll just kind of leave it here and see where this thing plays out. Now, one thing I do want to point out on just what I thought was interesting on the weekly chart. What is this? We've got RSI divergence right here, coming in right there from this low to this low right here, higher low in the RSI. This is just to show that like you have this fractal behavior pattern playing out right here. So if we go to the weekly again, just to mark off the RSI divergence on the weekly, you have this low relative to this low right here. And remember your higher low in the RSI. Bitcoin has never had bullish divergence on the RSI, by the way. So what we're doing right now is very, very historic for Bitcoin. And I think that's kind of one of the reasons why you have an impulsive movement like you're seeing right now, is because it's just the extreme nature of basically the market in its current state. Now you see we have this weekly RSI divergence marked off from that level to this level, but then you're also getting daily RSI divergence coming in at that level. So if we mark that off right here, you can see right there to right there. So you have the larger contextual weekly RSI divergence, and then you have a smaller RSI divergence, in this micro area relative to the weekly RSI divergence. And it's just a way to illustrate how things sort of came to a head within this consolidation. You've got these price distinctions that are happening on the higher time frames, and as price gets wedged into a narrowing range, you start to see some of those same distinctions that you were seeing on the higher time frames start to line up down the line on the lower time frames, going to the daily, to the 4 hour, to the hourly. And that's really the ideal framework to be taking like major position trades in, because it's sort of like a scenario where you almost have like a solar eclipse, right? And like where all the planets align in the sense that all the different time frames are aligning, and giving you this similar type of signal, right? And one of the hardest parts of trading is figuring out how to trade when you have all these different time frames that can be giving you very different signals, sometimes even completely opposite. So when you have a scenario where they're actually all aligning up together, that can generally contextualize some of the best trading opportunities, especially for long-term position trades. Anyway, I hope you guys like this video. If you guys haven't subscribed already, please make sure to subscribe when you get a chance, and I'll catch you guys in the next